Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is December 10th, 2024, and today on our call we have the CEO, Rob Carducci from Glow LifeTech. Glow LifeTech trades on the CSE, Canadian Securities Exchange, under the symbol GLOW, G-L-O-W, and it also trades on the OTC under GLWLF. The company is currently trading at 6 cents with about 151 million shares outstanding, or about a $9 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. We've been sort of waiting for this opportunity to bring Rob on. A number of our members have participated in the financing and are shareholders, so anxious to get an update and get to talk to Rob here. So, Rob, welcome. Thanks for coming. Looking forward.
Yeah, it's great to be here. Thanks for having us.
Yeah. Excellent. Looking forward to this. I know you got a presentation. I'm going to hand it over to you, and then we can follow up with some questions. So, welcome aboard.
Perfect. Well, pleasure to be here, Paul, Trevor. It's good to connect with you guys and great to connect with your network. We've got some exciting things going on at Glow, and it's been a dynamic time. But there's a lot more to the story. And so what we wanted to give a little bit of an overview today is just a bit of the story about what Glow is as a whole for those who may not be totally aware of what we do. There's also some tidbits in there that aren't always obvious from the press releases that are always good to tease out, and I will jump on some of those. And we'll talk a little bit about some of the latest results that would have been in our press release. But as always, everyone can always go to our latest releases on our website and the MD&A, and always direct everyone to have a look there. Okay. So the usual, we've got forward-looking statements and disclosure, so be mindful of that, everyone. But really, at our core, at Glow LifeTech, the way we think about ourselves and at our core is really what we'd call an ingredient technology company. And so we really innovate like a tech company, but we operate like a health or a CPG company. And that's important because at the core of us is technology that underpins everything we do. And that's where a lot of our R&D focus, and really the first couple of years of the life of our company has been focused on, was really on the R&D phase. And 2024 was really a pivotal year for us that emerged of R&D and really shifted into our commercial phase. And it's still early days there, but some exciting things that we'll cover today and talk about there. And so, but what our technology really is focused on is ultimately in the natural health space. And really, it's simply about making natural health products more effective and enjoyable. So making natural health products that work, if you really want to simplify that. And so what underpins our company, really our advanced technology platform that we'll dig into. And that platform allows us to make next generation cannabis products, but as well as nutraceuticals, supplements, and botanicals. And what you see a lot of our focus and conversation on today will be mostly on the cannabis space, but we'll talk a little bit about kind of looking forward and what we think about kind of the future, the long-term view of Glow as a whole. In 2024 was a really exciting and dynamic time, as I said. So we're really in the mode of commercial scale up. And so we did that by launching 2 cannabis brands in Ontario, Canada. We'll talk through some of those early results, but some really great traction so far. We're delivering some really great margins, and I would say kind of best-in-class margins, absolutely in the cannabis space. But really, we hold ourselves to a higher standard and look to tech and health as where we want to be from a margin perspective. And then this year was also a busy time in us solidifying and fortifying our balance sheet. So you'll see some of those news as of recent, where we wanted to really make sure we cleaned up our balance sheet so that we set ourselves up for our growth plan, kind of for the short, but also the long term. Okay. And so what Glow does ultimately is really about unlocking a new era of cannabis and natural health products. Now, our focus as of right now is primarily on cannabis, But really what we do at our core is about improving the absorption of these ingredients so that these natural health products really can work a lot more effectively and are a lot more enjoyable to consume. And so the technologies that we play in are called delivery system technologies. And it kind of is very literal, where you're taking a compound, a natural health compound, and this technology, which is really borrowed from the pharma space originally, 20 years ago, was developed as kind of cancer treatments. But taking these compounds, turning them into kind of nanoparticles, and then delivering them into the body where they're meant to be. And that's what helps make these products more effective, more enjoyable, and in our case, water soluble. And so with these technologies, we have the ability to make proprietary ingredients. And so the first couple of years of our business was really around applying those technologies to make a suite of cannabis ingredients. So every cannabinoid from THC, CBD, CBG, CBN, we really have all these components of ingredients in liquid and in powder format. And then we can take those ingredients and form our own brands with them, right? So now we have these proprietary ingredients that we can then make these forward-looking and next-generation brands that are more effective and more enjoyable for the end consumer. But what we also have from an aspect of our business is really thinking from an IP perspective, is that we kind of, you can see here, we think end to end. So we play in the technology space, and we can play in the ingredient space, we can play in the brand space, but we can also play in the licensing space. So we've got technology, we've got brands, we've got ingredients that we can really think about as we look kind of globally how we want to commercialize this business going forward. And so just really at a high level, a snapshot of what kind of is happening as of late. So as I said, 2024 was when we really, in a major way, launched our 2 cannabis brands into Ontario. And I'll walk through exactly what those are. But since then, this year, we now have 11 SKUs launched in Ontario, which that is a major barrier for entry in the cannabis space, because all products are sold through the government. And so it's a getting through that gauntlet is a major value add and asset to the company, because that's kind of the roadblock and the barrier to entry. And so now we've got ourselves listed, and primarily our whole portfolio is listed in Ontario, and we wanted to focus in on winning in Canada's largest province, really. And so the results really follow from that. We've 10x'd our monthly volume from January through to September, the end of Q3. We started the year with maybe 50 stores available in distribution, and now we're over 650 stores in Ontario alone. For context, there's almost 1,700 stores in Ontario alone, and 3,600 stores across Canada. So tons of headroom for growth for us there. And in a short period of time, part of the reason why we focus in on one territory first is to really solidify a winning position in that territory, because then it makes it easier to go and take it to other provinces and expand. And that's really working for us. In under 6 months, we're now the number three oils brand in Ontario, which is a major feat for a new brand. And we're also the number 1 oils brand innovation in 2024. So great traction from a customer level at the retail level, great feedback from consumers that are buying and repurchasing, and we're really establishing a winning position there that we can grow from for the long term. And so the latest results you can kind of see on the chart there. We've obviously been accelerating quite quickly, and basically that follows as our distribution increases, and that's really our focus, is growing distribution. And so in Q3, our revenue was up 49% quarter over quarter. Our margins we're really proud of. That's somewhere that we were really disciplined in cost control, and we're at 73% gross margin, which is something that we are very proud of, because that really stands heads and shoulder above where most of the cannabis space is today, but also is impressive just looking at if we were benchmarking against CPG as well. And not only that, we've sustained it now over 3 or 4 quarters. That is healthy margin, even at a smaller scale. So we only have room to improve going forward. And then also gross profit. Gross profit growing faster than revenue is also a great thing to see, because as we get scale, we have opportunities to improve our margin as well going forward. Okay. And so when I talked about our brands growing, these are the two brands that we launched in Canada, Mod Drops and Decimal Capsules. And we really were focused on two segments. Mod is a liquid drop, and I can show you, think kind of a small little eyedropper size bottle, really, really innovative in the cannabis space, and unique. Nothing else like it. And Decimal is a powder-based capsule, also very unique in the cannabis space. And both of these products really have a consistent theme with them. They're underpinned with our proprietary technology, but they're all about being fast-acting, great tasting, and ultimately actually delivering some of the best value in the category. And that's because we really were innovative across every aspect of the product, from packaging to price point to portfolio to flavors, and then obviously our really culminating in our technology that allows us to deliver this better product experience and better value. And so, part of the reason why we wanted to, we thought, and point blank, we kind of spent some time early in our journey thinking about just being an ingredient supplier. But we quickly realized that because Canada is such a competitive space, that there really isn't a lot of room for, say, multiple brands to use our ingredients. So, my background, I spent over a decade in CPG at Nestle and Kraft Foods. And so we know how to build consumer brands. And really what we said is Canada is really the opportunity for us to showcase this technology in its best light. And there's no one better suited to do that than us. I'm happy to say that's really working out for us because obviously there's quite a bit more profit on the bone when you are managing the brands all the way to the consumer level. And so these brands have been getting great reception, and our focus going forward is really just about expanding distribution on these brands. We still have room to grow in Ontario, and I'll talk a little bit more going forward about how we will look to grow across Canada. But this is think of it as like a great proof case. Proves our technologies, proves our ability to take those technologies and put them into compelling brands that really meet the needs of consumers. And along the way, we're building more brand IP, formulation IP, and expertise that we can then kind of take around the world when we choose to do that. And so I talked a little bit about our margins. This is something that we've been around for a few years actually, and we're fortunate that with a background in CPG, it's quite obvious when you come from that world that if you're not in the 50 plus gross margin space, it's really hard to deliver sustainable, profitable growth. And so we're fortunate that, a few years ago, we really built our company and our business model from the ground up to be profitable. And so that's why we were able to deliver such healthy margins from day one. Our footprint is extremely small. I'm talking from a 2,500 square foot facility, we can supply the entire country. We have relatively, low CapEx requirements for our business. Low footprint allows us to be super efficient and not spend a ton on CapEx. That small footprint and low amount of CapEx also means that we don't need a lot of people to run the business. And so our team is extremely lean. And then when you take all those things combined, where you have a really lean and efficient operation, combined with some really differentiated and unique products, and then sold at a very compelling price, and that formula is all clicking and working for us. And that's why you see, we look at some of the best of the best in terms of margin in the industry from a cannabis space, and those who are doing very well, we're still kind of, I would say, a level above where some of those folks are, and we stay focused on keeping our costs in control to make sure that we maintain that going forward. Okay. And so if we take a step back and just say, what is our technology? I'll talk a little bit more about the tech kind of that underpins our business, because I think this is important to understand. What most people don't realize is that most of the natural health products, the supplements, the vitamins, if you're going into a Walmart or a Loblaws here in Canada, most of the products on the shelf there are, I would say, just kind of commodity supplements. And cannabis is very similar to most supplements and vitamins. You have a lot of oil-based compounds. And a problem, if you really kind of start to dig deep, and you're seeing this become a lot more mainstream now, as health becomes a lot bigger focus for folks, you'll hear this term thrown around called bioavailability. And so really what you've got is this widespread issue of low bioavailability. And kind of simply said, what that means is you're consuming these ingredients, but your body's not really absorbing them. And so if you're not absorbing them, then they're not really effective, and you're not really getting the potential health benefits of those compounds. And that's something that we really want, we focus on striving on being the solution for that. And so you find that consistent across not only cannabis. So we show, on the page, what we talk about is CBD on average. If you're consuming a CBD oil, your body might be absorbing about 5% of that. And then you're really, evacuating the rest of it in the toilet. Vitamin C, the same. A big one, curcumin, was at one point the #2 supplement before CBD came in, at least in the US. And so you have this consistent issue of low efficacy, right? People think that supplements don't really work. You don't get a lot of health benefits from them. You get unpredictable effects. I think everyone's knows why you take the edibles or the oils, and especially in THC, and you don't feel it for an hour and a half. They're slow onset, and you ultimately get a lot of waste because you're not actually getting the benefit of that whole ingredient that you're paying for ultimately. And so that's where we focus, the solution. And so our technology is called MyCell technology. It really is, it is called a MyCell delivery system. And really ultimately what it's focused on is just delivering more effective health products that are engineered for absorption. And a really important part of what we focus on is, because there are other technologies that play in this space, but what we spent a lot of time in our R&D on is finding a way to do this, using all natural ingredients. And that is much more difficult than using synthetic ingredients. There are some of those out there, but ultimately the unfortunate part when you're using synthetics is the product tastes synthetic. It tastes like chemicals, and is really not enjoyable. And we know in the long term, anything that's about food or ingestion needs to taste great. And we know people are turning to natural health products to avoid synthetics. So that was an area that we really take pride on and spent a lot of focus on, is doing it in the most natural way possible. Okay. So ultimately, the MyCell delivery technology, we actually have a technology partner in Switzerland. So I would put this under an advanced technology. You kind of think of things as there's food grade technologies and then more pharma grade technology. This is a much more sophisticated technology that is more stable, more effective. And really what that ultimately delivers is better results and outcomes. And so, basically what it means is our ingredients at their core deliver improved absorption, they're faster onset, you get more predictable dosing and great taste for the end consumer. And so those things combined, or when we say these combined, really ultimately deliver a next generation natural health product or cannabis product. And that's what we're bringing to life and bringing to the market today. From a processing, just for those who want to know, how does this work? Ultimately, our inputs are, we can buy basically off the shelf inputs of these compounds, whether it be THC, CBD, or curcumin or vitamins. And we buy these ingredients and compounds, we run them through our processing and our technology, and then the output is really these high absorption proprietary ingredients that we can then convert into brands, use to infuse brands, sell the ingredients as a whole, or do whatever we want as we go forward. Okay. And so our technology is quite versatile. And so that's why we think of it as a platform. So we have the ability to make liquid ingredients. We can make powder ingredients. And these are individual components that we've spent time developing. We can take those powders, as you've seen in our Decimal brand, we could take those powders and put them into capsules. And then we can take either liquid or powder and make other formats like gummies or edibles and whatnot. And so we're really a multifaceted platform that we have the raw components, think of like building blocks, we can assemble any way we would want. And that's really important because as we think about all the different permutations everything from cannabis alone, combining cannabis and nutraceuticals one day if the regulatory environment allows. We've got all those building blocks ready and waiting for us. And so what 2024, this is really what our innovation roadmap looked like. Basically we've been knocking at the door with the government, the Ontario Cannabis Store in Ontario. That's who you sell through one master distributor, and they sell to all 1,700 stores in Ontario. And so we started one SKU, then two, then another four, then another three, and then finally another one just a couple months ago. And what's great to see the evolution is that almost to a T, every SKU we've launched, our SKUs are getting stronger and stronger and stronger. So some of our later SKUs, we started with single packs, then we got into 3 or 4 packs, and then now we're into 10 packs. And the more we grow, actually, the stronger those SKUs are getting, which is great to see because our brands are getting traction, we're building loyalty, and our portfolio strategy is really coming to life as we see it. Okay. But as we think about our business, if we think about the medium to long term, what's important to know is as we're focused on cannabis right now, because we know our technology is, say, superior to what's in the market today, and we can win, and we've kind of proven that in a short amount of time. But we know we've got legs and we've got different avenues to grow the business going forward. So when we think about what are the, say, growth vectors for us long term, in the near term, we're talking about getting more distribution in Canada. Lots of headroom in Ontario alone, right? We can double our distribution for our just in number of stores, but also the number of SKUs listed at each store. Now we're thinking about new provinces. So how do we take it across Canada? That's a lot easier now that we can walk around and say hey, look, we're the number three brand in Ontario. Makes the selling a lot easier. But now we're also starting to think about new formats, what new formats we might want to enter, whether that's something like a gummy or a beverage or a topical or an edible or something like that. Those are things we're exploring. But now we also, you can imagine it's a lot more pragmatic to have conversations about licensing or moving to different geographies when you've got proven businesses to have those conversations. So things like B2B licensing, whether it be in the United States, Mexico, Europe, and Asia, as cannabis is coming on board, those conversations are really interesting, and we're getting some questions there. But we also then have the long-term view of we view ourselves, again, as I go back to the original page, we're an ingredient technology company focused on natural health. We're not just a cannabis play. We're really focused on next generation natural health products. And so with our partners in Switzerland, there already is a portfolio of micelle ingredients kind of ready and waiting in really cutting edge areas in nutraceuticals and longevity and immunity and inflammation. So all these cutting edge ingredients are ready and available for us that we have access to, should we want to kind of repeat this model of putting those into really cutting edge brands, or bringing an ingredient technology partner. And so what are we left with? I think what's important is we wanted to make sure we got a holistic view of our business. We know we got to have good, differentiated, and category leading brands, and we've got those. We believe we've got those in our portfolio today with Mod and Decimal. We built a sustainable, kind of profitable business model. So the operation is right sized for this market, delivers good margin today. We can just focus on growth. But then we've also got a lot of opportunities for growth in the long term. Some good short-term, near-term revenue growth that's pretty straightforward, but a lot of optionality for us going forward. And that's really what our focus is going forward is, here and now we're simply straightforward focus on growing across Canada. And we're getting some good traction there. Every day we unlock new doors, new distribution points. But as we look forward, I think you'll see us, maybe in the more medium to long term, think about things like new formats, new geographies, and stuff like that. Just the housekeeping from a cap structure here, and one area that I know we wanted to make sure we talked about it in our press release because I think the details matter is while we've recently spent the past 3 months cleaning up our balance sheet and cashing up the business through some financing and reducing our debt through some settlements. I think we really want to highlight for folks are the details of where that dilution went, and because we did this very intentionally, and that the majority of say the folks that participated in our financings over the past few months are folks that are either insiders, management, long-term shareholders that have been with us for a few years, kind of from day one. And so we really made sure that the ownership structure is really aligned with the long-term success of the company. And so that's why you see, you've got 28% of the shares are owned by insiders. And even from a warrant perspective, we think about those warrants there and the overhang there, but the majority of those warrants that are outstanding are also sitting with insiders. And that's not even including the kind of long-term shareholders that we have in the roster there. So we were very intentional about the financings and keeping the deal tight there. And we've got a big focus on getting quality investors within the company, and everyone is kind of really excited with the progress that we're seeing today. Kind of last to wrap up here, this is just to highlight our great team that's really been with us kind of from day one. I've been with the company for over 3 years now as a kind of founding executive, but so is most of this team. And so, you've got a lot of a good tight team that's been with us from day one, really going above and beyond. And so good, strong team to see this business forward. And that's about it for me.
Excellent, Rob. Thank you. Yeah, I've got a bunch of questions lined up, but remind everybody that's listening, if you get a question, please use the chat function and we'll ask the question. Rob, when I first found out about the business, I was impressed by the fact that you've got some traction now. You're selling a product, but really, as you explained, the core platform underneath the business and kind of what you're trying to do and how it can apply so much outside of the cannabis space. I mean, how far are you along in terms of anything outside of cannabis? Is it still too early to look at that, or like what does that look like, and what would be the next steps for you in that case?
Yeah, so good question. And if you go, if you look back a couple of years in our business, we started, kind of right when COVID was hitting. And so I point folks to go and have a look at some of the work we actually were quite forward thinking in our nutraceutical space, where we during COVID, myself and in collaboration with our Swiss partners, we actually focused on a product that was oriented towards a COVID, I don't want to say treatment because there's a lot of legality around that, but actually a product that was quite powerful and went through clinical studies on treating the inflammation symptoms around COVID. And so we'd spent some time there. So it's not as if we haven't looked at that and it's not in the back burner. But what we quickly realized is the most important thing for us was to get the business to, say, a break-even point and get it to solidify a core business and a core engine that was generating cash and cash flow positive. That was our focus. And the quickest path to do that was with cannabis, because as you can imagine, cannabis, it's a lot easier to demonstrate the effectiveness of better absorption, right? You have intoxicating effects, so it's much easier to literally have someone try it and they can feel the difference. Nutraceuticals, it's a little different. And cannabis, relatively speaking to, say, the supplements world, cannabis, you've got a lot of new players. Even though they've only been around, they might be 3 years now. That's a lot younger of a company than say the big folks that have been playing in supplements. Mm-hmm. And so I would say, for us, the strategy is keep pushing cannabis until we get to a point where we are happy with, say, the cash flow generating from our business, that we can then confidently go and invest in new growth territories and new growth verticals. But I would say we are constantly looking at that and fielding questions in collaboration with our Swiss partners. But what I can tell you from a true licensing perspective, we have exclusive licenses, some really important versions of this ingredient, say curcumin, for example, which before CBD, curcumin, which is the active compound in turmeric, extremely, extremely impressive ingredient. we have exclusive rights to that for North America. So really important stuff that we do take seriously and think about. But our first priority is solidify the core, get to good profitability, and then look elsewhere.
Perfect. Perfect. Okay, so there's two directions I want to go based on what you just said there. First off, your existing products right now, the Mod and Decimal, what's the addressable market in Canada for those two categories? How big is that market?
So look, what's really interesting to see come to life is, especially on, say, you got to talk about them separately, really, but you've got two different brands that are solving real consumer needs. And what's important about building quality brands is that they are distinct and they have an ownable idea behind them. Mod is a drop, and it really is around allowing people to customize their experience. Whether that's a low dose consumer or a high dose consumer, it's ultimately about customization. That's an idea that applies to a wide swath of the market, right? It's not just newbies, it's not just experience. And so we're seeing that come to life with the acceptance and the appeal of our product. It's versatile. So it's appealing to those who want microdosing and low dose and kind of new people to the industry, but it's also being used as an add-on, as a really high value product that someone who needs a higher dose that they can't currently get from edibles because there's a lot of restrictions around 10 milligram dosing. We fall under as an extract, so we can sell a bottle of our oil, which is technically an oil, and that has 100 milligrams, and so we deal with basically 5-10 times better value than some of the competitive sets. And so something like Mod is not just competing with oils. We're actually stealing a lot of share from edibles, from beverages, but and other, say, high potency stuff. So the real magic is its broad appeal.
Mm-hmm.
It really is working, and these are the conversations that we have at a retail level, what they're loving, because it's a product that a retailer can recommend, quote unquote recommend, but they can bring up and suggest to anybody that comes through their door because of the broad appeal. And Decimal is very similar. There's a lot of products. There's an interesting dynamic for those who are really close in the cannabis space or in Canada around these ingestible extracts, right? And some of these products have done very, very well, and they're kind of living in a gray territory from the regulatory standpoint. And we've seen a few of these products come in. Health Canada says they got to go out. But now what we're seeing is Decimal is really benefiting from that, because you've got some of these products that are getting kind of withdrawn from the market by Health Canada, and Decimal's filling the gap, because Decimal is actually priced at about 30 to 40% cheaper than the category leader today. So really positioned to win. And it's just a matter of time and we've talked about this. Our commercial success so far right now, we kind of haven't even scratched the surface. We haven't really even deployed much marketing or sales infrastructure. It's mostly organic growth. And so that's why it was important to get some cash and fuel in the business, because now we can kind of be a more forward aggressive stance, that we can now take some of those early wins and be a lot more aggressive in expanding distribution, but also velocity in the stores that we are already listed.
Mm-hmm. Now, from what I can understand, and maybe clear this up for me, like is the amount of THC or CBD or whatever version you have, is a consumer getting like a bigger impact from the same amount of THC as a competing product would give you? Do you know what I'm getting at?
Yeah.
Is that really
general,
what's happening?
In general, yes. And it's better bioavailability. It literally means more of that compound is getting into the bloodstream, right? And so not only this is where it's water soluble is what that means. So if you were to take Mod and you put it in a glass of water, it dissolves and not like an oil, which would just kind of bubble. And that really is kind of an indication of what's happening in the body. Your body's made mostly up of water, so it's really primed, ready to absorb. It's packaged. Micelles are what your body naturally does. That's how your body, if you were to take an oil, your body, your stomach, it's already doing this micellization. We just do it in the lab, in the equipment. So your body says, oh, hey, I can absorb this real quick. It absorbs faster. And yes, you generally get a more effective dose. So you feel it faster and say a more concentrated and higher potency of it.
Perfect.
Yeah.
Now you mentioned the word break even just now. Maybe give us a sense. What really appealed to me early on is the level of margins that you're getting. So, with those kind of margins, you don't have to get significantly high amount of revenue to break even. So give us a sense. Where do you break even? What do you still need to do to get there? What can you tell us?
Yeah. So look, you'll see, you can kind of maybe read between the lines when we do our recent press releases around the financial results, and you'll notice a few things. Our focus on EBITDA, not just adjusted EBITDA, and that's because we hold ourselves to a much higher benchmark in delivering true kind of cash flow, where we're not trying to hide a bunch of or pull a bunch of cash expenses out in the adjustments. And so, our model, and you can tell by our EBITDA numbers in the last quarter, the trajectory that we're on, we are moving the business towards a positive EBITDA standpoint. We don't believe we're far from that. The trajectory of our growth, especially because we're only just scratching the surface on distribution. We think about right now, we're 650 plus stores in Ontario, and we have about, an average of about 2.5 SKUs sold in those stores. So we not only have room to go broader in those stores, or deeper in our portfolio, but we can max out Ontario, and then not to mention unlocking other provinces that we're starting to have those conversations already. And so we think we're on the path to positive EBITDA. We're not giving any specific guidance as of right now. We're, at this stage of the company, I would still say we're still early stage, and every level there's kind of a roadblock we have to punch through. And especially as we're talking about unlocking new provinces, that, these provinces have longer listing periods. In the case of Quebec, they launch every 6 months, right? In Ontario, they were every quarter. Now they're every, say, a little bit faster, five periods a month. So there's these kind of step changes that you'll see overall, but we're confident we're on that trajectory to get there. And a big part of that is delivering that sustainable margin, that we don't need the business to be $20 million in revenue to get to break even. I think that, folks, if you look at where the top line is going and the margin to get there, and you look at what the EBITDA loss is right now, we can see we're well on our way.
Mm-hmm. Now, you mentioned that you're just over 650 stores right now. What do you do to increase your store count? Like what's the process to go out and try to get that to a higher number?
Yeah, it's an interesting dynamic, because in the retail landscape, you've got a mix of, say, independent stores and more corporate franchise stores. And we're fortunate that the first leg really of our journey was we built a solid foundation of good, strong, independent mom and pop, say smaller operators that really diversified our base of our customer base. And that kind of puts a good level of support, that we're not reliant on, say, one or two big giant customers that can make or break our business. That was important for us as we got started. And then we kind of evolved into the next phase, where we got into some more medium to large size operators, brands like Tokyo Smoke. We started to really unlock some of these big brands that we started getting larger swaths of stores as we go along. And we've got a big pipeline that are really interested, and we're having active conversations with as of right now. So it's an exciting time, and a lot of that, it's a lot of pain up front to get there, but once you deliver some good results, now it's a lot easier of a conversation, and we have a lot more customers coming to us organically because they're seeing the results. They're seeing their, competitor down the street listing us and getting great results from it, and customers are asking for it, right? And so, basically going forward, what we have is we've got everything we do in the business is kind of lean. We've got a a third-party sales agency that we work with. Everything is scaled up according to sales. So as our sales are growing, so does the team. And so as we're scaling up, that team can also scale up. And it's really ultimately around, pounding the pavement and talking to buyers, and unlocking doors. If they list us already, we're getting new SKUs listed at their store and showing how good it's working and taking the successes from one store and bringing it to the other. If there's stores that don't list us today, we do the same thing. You give them a pitch. You say, here's how well it's working in the rest of the province. You should. And then at a provincial level, those are the conversations we're having, and say, look at the early success we're having already in the early days of this province. And it's basically we de-risk for them, those buyers, and taking the product in. Because that's, you got an ecosystem that, at least at a retail level, which is quite cash constrained. And so the fact that it's basically a proven winner makes it a lot easier now. The ball is moving to accelerate those adoptions for getting the products listed.
Mm-hmm. Fantastic. Now, you touched on the fact that you did some financings here recently. Maybe let's talk a little bit more about the real use of proceeds. Like what's the use of that cash? You talked about marketing and sales and things like that. Maybe peel that back a little bit here.
Yeah. And this is the exciting part for me, as a say career marketer. That's my background, and where I come from is the marketing side of things. And when I say we've only scratched the surface, I really mean that. We've kind of done more of, I would say, the entry package of what we've gone to market with today in the basics. And so that was a big part of the story as we were raising, is because we were in a fortunate position where we didn't have a huge chunk of debt on the business, and we had a means of settling that debt without using cash. That was important. And basically, the primary use of all the cash that we have is working capital to accelerate growth. It's truly about revenue generating activities. And that's the focus of those funds, right? We wanted to make sure that we had a good runway from the next year, that we can just focus on growing the business, less of say the raising side of things. And so that's where we're focused on is a lot of just fundamentals, right? It's building relationships and strengthening relationships with retailers, getting top of mind with bud tenders. They are the primary conduit when a customer comes into a cannabis store. Everything goes through a bud tender, and so that's what's working really well for us. In the test cases that we have done, we know doing very basic stuff, having some really unique displays, as simple as those are, doing some good training with bud tenders, getting some educational samples for bud tenders and the retailers, doing these very basic fundamentals, we can dramatically increase the velocity in that store, because it does take a moment for a retailer and a bud tender group to understand how different these products are and just how good they are, right? But we now have good base case in those training under our belt, that we now just need to scale that up and do more of that. So really the funds are about expanding our sales coverage, expanding, the marketing collateral and the assets that we deploy into the market. Mm-hmm. And so all that money is going into primarily, say, the retail channels, because that's where we believe the most effective use of every dollar is right now.
Mm-hmm.
Yeah.
So basically spending money on things that you already know are working. You're just going to, do more of it. Okay, perfect.
Yep.
Yeah, exactly. Okay, listen, let's start taking some questions. We've got a few people here, by the way, that know the industry very well. So we're going to get some good questions here.
Good.
We're going to start with one of them. So Mark asks or says, I heard what you said about Decimal and Mod being unique in the market, but I'm wondering, through the customer's eyes, who are your most direct competitors, and how is your proposition different from them?
Yeah, it's a good question. And so you really do got to think about these slightly different. So Mod, what I would say is our customers, what's really interesting is they kind of split. Some are viewing us as an oil, a more superior oil product. Okay. But I would say a big chunk of our retailers, if not the majority, are actually viewing us as a much better value edible and beverage. And so, we did some really smart things when we launched our products. And you'll notice, okay, yeah, I might ask, why is there 60 milligrams in a bottle, right? The reason why we did that is so that there's, the maximum edible allowance is 10 milligrams. And so you might have say the leading edible in the market might be around $7-8 for a 10 milligrams. Our first product that we launched was $10 for 60 milligrams, so 6 times. And so the reason why we did 6 is because it was an easy conversation for a bud tender to have to say, you basically get a 6-pack of beverages for almost the same price. And those little hacks, those mental hacks, make it a really easy cross sell or upsell for a customer. And so, and even when we were really smart in the way I would say when we went to retail and the way we think about distribution and merchandising. If you go into many of the retailers, we actually merchandise in both, say, the oil segment, but we also do, say, a Klingon in the beverage section. And so you have some retailers actually merchandising with beverage. And so that's so they discover us when they're thinking about buying one beverage, they can say, hey, here's an alternative that is water soluble, but you get a lot more value. And so Mod is a bit of a hybrid. Decimal is a little more straightforward and straight cut, where we compete kind of more directly with, say, capsules, but indirectly with this kind of gray area called ingestible extracts, which is kind of taking the industry a little bit by storm, where some of the LPs are finding some ways to kind of thread the needle questionably on some products where they're trying to be creative in the regulations. Some of them have been very successful and been pulled, a couple more recently. And so Decimal is really, I would say, competing with capsules more directly in these ingestible extracts. But we knew that going in, which is why, ultimately where our capsules are distinct from, say, an oil-based capsule is an oil-based capsule. A lot of them will talk about being a precise dose. But really all it is a precisely measured quantity of oil. It's an oil ultimately, and an oil is still slow acting, takes 90 minutes to feel its unpredictable effects. And so it's not really precision dosing. And so Decimal, the reason why the name came from that, is really owning the idea of a precision dose. Decimal only does capsules. It's not a vape brand that happens to do capsules. It only does precision dosing, and that's the territory that we want to own. This is a predictable, consistent, reliable, and most importantly, fast-acting capsule. Oils are very slow-acting, and Decimal is a fast-acting capsule. And a little treat there. The reason why that's a powder, that powder actually inside there is also a water-soluble powder. And so some folks you can break open that capsule and actually see it dissolve in liquid as well. And that's what makes it more fast acting. A big piece of that. So hopefully that answers. Yeah.
Yeah. And maybe you just answered the next question, but why use 2 different brand names versus one umbrella brand for all your unique products?
Yeah, look, this is, I would say, a strategy, a brand building strategy for the long term. And, we believe in brands and the power of brands. And what's important for a brand is to stand for something distinct. Our products need to be distinct and differentiated, and the brand ideas behind them need to be linked to those ideas. And like I said, Mod ultimately, in a word, is about customization, and Decimal is ultimately about precision dosing. And so those are territories that we can continue to innovate and build on as we go forward, and own those ideas in the minds of consumers. Say versus let's just say, use an example like the Hershey chocolate strategy. Hershey puts its name on any kind of chocolate, but there's a reason why Hershey may not own one specific territory, because you're kind of diluting that brand identity across a number of different need states. We believe that the idea of customization and the idea of precision dosing are big, broad, and long-lasting ideas that aren't going away anywhere, and they're only gonna continue. And so we want to own those for the long term. And so that's why two different brands, thinking of a more of a brand house strategy, or a house of brand strategy rather than a brand house.
Very interesting. Okay, next question. Can you talk about what sort of retailers you are in, i.e. large chains versus independents? And then a bracket says data fee implications.
Yeah, and so like I said earlier, it's honestly a mix, and we have a ton of some of the best independents across Ontario. The list would be too long, honestly, to name. It's in the hundreds now. But everything from one store operators to small ones that are maybe 3 or 4 to 10, but everything across the gamut now, even in the major retailers. So I mentioned a couple like Tokyo Smoke, Discounted Cannabis, or some of the maybe more big recognizable names. And a lot more of those, I would say, in the hopper that we're actively having conversations with. But we now have experience at the smallest level and at the highest level. And so, what's important and we kind of did that intentionally. And what's important now as we move up the ladder to say larger chains, that also then makes the entry into new provinces a little more turnkey, because I already have some of these retailers banging on our door to launch into other provinces because they want to put those brands in their other stores. So we're building a good kind of pent up demand across the country.
Yeah, that's perfect. That was going to be my next question. You mentioned it, like the ability to take some of these large retailers that are multi-provinces or working multi-provinces. Then what is the next step to try to get into the next province? You kind of already have some retailers that want to carry it. But what do you have to break down to be able to get into like a BC or
yeah, and so really we think about, you want to make sure, the way we think about it anyway is we don't want to limp into a market. You want to go into a market in a big focused area, or big way. And that means being able to enter the market with a good sales coverage, good sales team coverage, that you're calling on doors and unlocking those doors. You're ready to blitz them with a lot of the marketing and launch support that's required there, and with the right portfolio mix. And so when we go in an area, we go in strong and unlock it, because the worst thing you could do is limp in, not have good success with a buyer, and sort of putter out. And so we're actively looking at other provinces and teeing up which ones make sense for us to do in the immediate term versus the long term. And happy to say having some really good conversations with several provincial boards there. And so I would say, we're feeling positive. It's a matter of time. And so, we have to play this game of following their launch cycles. But the conversations are all positive. Honestly, folks are recognizing, it's one thing to recognize the uniqueness of a product, but then to see the results in a province like Ontario really seals the deal for many of these folks.
Yeah, awesome. Okay, next question. Can you say who you buy your distillate and other cannabinoids from?
No. Honestly, we take a strategy and approach, honestly, of continuous improvement. So we've gone through a couple different suppliers. We think about it actually. We de-risk ourselves. We don't go all in with one input buyer. We obviously see some fluctuations in the market of the cost of inputs, and the benefit is we get to realize a lot of those benefits when the price goes down. We can capture those savings from an input standpoint, but in general, we diversify our inputs. We do have some strict, from a quality standpoint, we have some strict requirements for what we want to, who we buy from, to meet certain purification thresholds. But we establish a handful of suppliers, I would say, that don't limit us to any one supplier.
Very good. Okay, so how does your technology/product differ from Source's? SORSE.
Source, yeah. No,
there you go.
And look, those guys are great, and there's a handful of technologies that have kind of come into Canada come in, had some success, and some not so good success. I would say a big differentiator where we focus on is some of the other technologies, at least in the cannabis space, I could see, and I would lump Source in there, is some focus more on the beverage space. Ours, we tended to focus a little bit more on the concentrate go to market, and those have some unique differentiators, right? It takes a different set of requirements to have something stable in a beverage, but it also equally has a different set of requirements to have something that can have great taste in a concentrated form. And so that's where we focused our energy, was focusing on these concentrate route to market, because we kind of believed that that was ultimately the best path to deliver great value for a consumer. We haven't really even started talking about the environmental footprint impact of being able to shove the equivalent of 6 beverages in a little tiny bottle. That's something that you can imagine us going forward, is just talking about the environmental footprint. And so there's some similarities where in general it's a lot of conversation about water solubility, a lot of conversations about bioavailability. But I would say, think of these technologies on a spectrum. Some are more food grade, some are more quote unquote pharma grade, a little more sophisticated in their stability. Do they say stable in their form? You don't have cannabis kind of leaching out and disintegrating during the life cycle of the product and disappointing consumers. And so I put us more on the pharma grade. I think we are more sophisticated and advanced technology, not necessarily directly comparing against any one or the other, but just in the spectrum of those technologies. And a big piece that we focused in on is doing it in a way that is all natural, because we think in the long term, look, there's a lot of unknowns in the kind of the nanotechnology world, and a big piece that we feel strongly about is doing things in the most natural way possible. We do believe that folks are coming to natural products for a good reason, and we want to make sure we're doing it in the most natural way possible. And that's a more difficult thing to do that we kind of, I think, separate ourselves versus some of the competition, is doing everything all natural. Okay.
A follow-up question is, Mark says, what other prominent competitive technologies should Mark compare you with?
Look, I think you've got a couple good guys in the market, Source, Vertosa, a lot of good ones. But frankly, there's been a couple that have come into the market. Mostly they kind of come out of the US, and they've come into Canada and haven't had a lot of success. And that's something that we also take pride on, is, and part of it is on the technology and the product, right? How do you it's one thing, it's not just about the technology. And I think that's a piece that we want to stress, is technology is one piece of the puzzle, but you need to assemble it in a product configuration and a formulation that makes sense. You need to price it appropriately and position it under the right brand in the right way. That is the secret sauce of how, say, CPG brands is doing all those things well, set you up for success. And I think that's the piece that took us a little more time, but we took our time for a reason, because you got to get all those things right and ducks in a row to really unlock the key and to get to sustainable success.
Mm-hmm. Okay, Gote asks, how does your micelle technology differ from regular emulsifiers? Is the onset faster?
So I would say, look, again, the spectrum of emulsification or emulsifiers is broad. I think for me, the best way to think about it is just on a spectrum. Some are more food grade. Emulsifiers have been used in the food world, everything from ice cream and beverages for probably 100 years now. And so you have some things that are just about holding 2 ingredients together, whereas a micelle delivery system is a much more advanced delivery system, more sophisticated, that has a higher threshold of stability and also performance being onset and bioavailability improvement. And that's where we wanted to play on, right? We wanted to play in the sophisticated end of the spectrum, because we ultimately think cannabis as a whole, we kind of take it for granted in, say, the alcohol or the vitamin space or the food world, where things are consistent and predictable. And so part of that magic equation is having fast onset. And some of the more sophisticated technologies are a little bit better at that. And that's a piece that we wanted to make sure we leaned into, is fast onset, because that's, having somebody be able to feel the effects in, say, 15, 20, 30 minutes is an important part of the experience that helps people not overdose, helps them, feel the effects obviously quicker, and feel the result of what they, originally came to this product in the first place for.
Yeah, it's sort of, Jeremy asked a question that kind of leads me to that is, how do you market or label the product so that the consumers understand the potency or the effectiveness of the product?
Yeah. Okay. I wish the cannabis, if there's no other way of saying it than cannabis, is tricky, right? Marketing is very tricky. But our belief is there's still a way to build brands. Okay. But you have to build brands differently in cannabis than you would, say, in a traditional CPG. But the principles are still the same, right? The principles are still, you got to deliver. You have to solve a need, an unmet need for a consumer, deliver a great product consistently at the right price value equation. And focusing on really understanding deeply your consumer and understanding what are their pain points, and assembling your brand in a way that solves real pain points, right? Differently than someone else, right? And that's being unique and differentiated is important. Having an ownable brand idea that links to your product is important. And so, but in the cannabis space, I think the way I talked about what our go-to-market strategy is, if you can't necessarily go out and buy a Facebook ad or a billboard because you've got constraints there, you got to build a great product. And I think what a lot of folks, the first few years in cannabis, what you saw is folks just basically were kind of in a world where whatever you could produce, someone would buy, and then they wouldn't repeat buy because they had a horrible experience. That's something that we had to get. We knew we wanted to avoid that cycle, right? Get to a great product experience, build a compelling and differentiated proposition that resonates with, first and foremost, retailers and bud tenders, that they can actually have something different and unique to sell in their store, not just the 45th oil product that they carry, something different and unique packaging, unique technology, unique benefits, unique brand idea, and a unique price point portfolio strategy. Those things together give a retailer something to sell. And then that cycle, great product, good product experience, repeat buying, that's how you build brands over the long term. And from my point of view, you don't look, the reality is you'll see us now talk a lot about excise tax. We built our business to assume that was the status quo. Excise tax goes away, our margin just get even better, right? And margins, having a healthy margin is what allows us to invest all day in these brand building activities, right? I think, some of the earlier part of this cannabis journey was you had some big investment up front, but now it's getting a little bit quiet. And that's what we hear from our retailers is, wow, you guys are investing in some fundamentals like displays and education and bud tender samples. There's a reason why when you walk into a convenience store, you see a chocolate bar sign, or an ice cream freezer, and you trip over them, right? And those are the two businesses I ran. Displays go a long way if you do them right and do them properly. And you build great products at a good value, give consumers a good experience, and then build some repeat business, because repeat business is really where businesses are made.
Marketing 101. Yeah, absolutely. Okay, so Paul asks, how quick can you increase your store counts and expand to other provinces? Let's talk about that a little bit. Like, what's your goal, if anything? I mean, it's hard to predict exactly, but what would you like to see in terms of expanding to other provinces? And then the other part of the question I'd ask is, like, what do you need to do internally to be able to handle more stores? Do you have to change anything to be able to do that?
Yeah, good question. So I would say the most immediate move is we're kind of doubling down in Ontario. We have good coverage from a staffing perspective. our sales team, and we're obviously already listed. We have the full portfolio listed there. So we're going to double down in Ontario, get more SKUs listed at the stores we have, and expand coverage there. Now, I don't see any reason why we can't be in every store in the province or in the country. We truly have what I believe is some of the best products in the market and the best value proposition in the market. I would expect us to say, to unlock, in an ideal world, at least a couple more provinces in the medium term. And I think, we're looking at some smaller provinces, also bigger provinces. And I think we can bolt on some of those in the medium term. The response has been great. We look, every market is different. Some of the provinces are all government basically runs retailers. Some are more private based, and those have a different kind of go-to-market strategy. And so we're testing and learning what is the right way to grow right now versus say, in the back half of 2025 or something like that. So short answer is we're trying to get a couple more provinces under our belt, and those conversations are well underway. I would expect that we get some good information, whether on Ontario increasing our listing or some new provinces in the not so distant future anyway. But yeah, look, I think part of the strategy too is geographic based, and you've got there's a magic to proximity, and it's expanding out west is different than expanding in our next door neighbors or something like that. The further you go, you got to think about things like transportation and shipment and having an extended team. But to answer your question on the team front, I would say we run the ship very lean, and we intend to continue doing that. I think there's a good healthy role for, say, hybrid sales marketing teams and configurations where we likely will bring on some folks in the core team internally, but we do lean heavily on, say, a third party basis because it's just a more efficient way for us to get wide coverage fast, right? And I think a good healthy mix of that is the best way forward for us as of right now. But that always shifts, depending on what our configuration looks like. A few months from now, we can adapt, and I think that's the most important principle for us, is to maintain agility and be able to scale up and down real quick. And we have that flexibility right now. We can adapt.
It's safe to say you'll see new provinces in 2025?
I would say that is absolutely our plan. Yes.
Yeah. Okay, perfect. Okay, so question around the MyCell licensing agreement. How's it structured? / ongoing royalties, annual licensing fee, lump sum deal. What can you tell us about the structure of the deal?
Yeah, so we have, from a cannabis perspective, as of right now, we have exclusivity for North America, including the United States, Mexico, obviously Canada. And so we have exclusivity there, and also some select nutraceuticals. We have North American exclusivity. The terms, say, of that are primarily based on, say, a royalty basis. But an important point to note there is that actually, like, a big chunk of our royalties were prepaid a couple of years ago. So we have, I would say, like, the first, 10 million, don't quote me on the number, but first double-digit millions of dollars of sales are basically prepaid royalties already. So not going to be a cash burn for us, which is great. I also didn't mention that our Swiss partners are, important shareholders and real partners in the business. They're, it's not just a licensing deal. We speak with the CEO and the management of that company on a weekly basis. And so we really have kind of been in bed together for 3 years now. And so we look at ourselves more as partners than just, say, a licensing deal. So they also, it's a two-way street that's mutually beneficial. They're out there in Europe, really talking about Glow, and so it's really dynamic and symbiotic from that perspective. But in short answer, royalty based, but a big part, at least in the short to medium term, are already prepaid and covered for.
Gotcha.
Yeah.
Awesome. Okay, so Jeremy says, my understanding is that the cost my understanding is that cost is the major driver in marijuana retail. I wonder how do your potential customers choose your product over competitors? Do they have to try it to see the advantage, or is there a price advantage or word of mouth marketing?
Yeah, so value is, cannabis is going through a journey, and value in most categories, say in CPG, consumers are always gonna say price is the number one driver, and that's kind of no different in cannabis. I mean, we knew that 3 years ago. And so we engineered our products and the configuration and the dosing and the price points intentionally to be better value than the category leaders. And so that's why I talk about, mod is really anchored. Our frame of reference for mod is really edibles. We're very clear. It's a tincture, it's an extract, but the frame of reference for customers is an edible. And that's what delivers, 4, 5, 6x the value, is because they're paying $10 for 10 milligrams when they can pay $10 for 60 milligrams for us. So value immediately there. That's even only on our single product. We then have since launched a 3-pack, a 10-pack, and the value only gets better as you move up those higher price points in the, just think standard kind of heavy user packs as you go from there. And so Decimal's the same thing. We engineered that to be, say, and now we're resulting, and you could take the top three capsules brands in the market today, and we're somewhere between 30 to 50% better value than the category leaders today, right? So that's why, we have a lot of confidence that when you combine, you kind of have a game-changing product experience where you've got fast-acting, all-natural, rapid onset, combined with better value. We know over time that we expect that to improve on the Decimal, or at least get better distribution and performance on the Decimal side of the business too. So that is our pitch to retailers. It's very, we tend to lead with price and product at the same time, right? And that's the story: is better product at a better value. It's quite simple, right? And then from a bud tender perspective, depending on the province you're in, you have some ability to have them taste or at least sample the product to actually experience it themselves.
Mm-hmm. Yeah. Awesome. Okay, so we've got a question from Trevor from the UK. He says, from a complete naive non-user from the not yet legal UK general market, how safe is the product on a long-term basis?
Look, one of the critical reasons why we went down the road of being all natural was safety, right? And so, like there's a conversation to be had about cannabis safety. Then there's, say, technologies legacy, these emulsification technologies are kind of its own safety conversation. I'm not necessarily going to go down the rabbit hole to the cannabis safety thing, but I think there's, all I would say is there needs to be more research, right? And I think everyone would agree with that. There needs to be more research, but we follow that closely. But there's a reason why we kind of focus a lot more on the, say, lower end of the dosing spectrum, right? They're really meant to be dose control friendly. Our drops is 1 milligram at a time. Very easy to dose. You don't need a PhD in the apparatus. Very consumer friendly to understand how to dose that. And same with capsules. It's a pre-dosed kind of amount. So very simple to understand. That's where we wanted to stay in. The other angle I think I would just speak to that is on the technology space is, look, there's a lot unknown, and there needs to be more research around kind of these sophisticated nanotechnologies, and hence why we wanted to stay in the realm of using natural products, because we are firm believers in how natural products can be safer if used in the right dosages.
Mm-hmm. Gotcha. Okay, last question from the audience. Mark asks or says, I think I heard you say use an external sales agency. If I have that correct, can you say how many other brands they also represent, and how do you make sure that you get the attention you deserve?
Yeah, good question. Because this is a huge consideration in determining that go-to-market, because very well asked, and for those who may not understand, you can imagine there's a handful now. Even that business has been very tough, but the agencies that have survived, and there's a handful out there that are really good. But one of the challenges is if you go to this agency, you're one of 30 brands in their portfolio, you don't get the attention. And a big consideration for us too is because our product is so disruptive and unique, we're very kind of blunt and we compare ourselves directly with the category leaders. And so we got to make sure that we're not actually in the same portfolio as those category leaders, because then your salesperson can't be as blunt. They can't undercut their other brand that they have to go and sell in. And so the current partner that we use right now, very intentionally, I would say we're basically 50% of their portfolio, and we are their primary brand. So we are a big important piece of their business, and they've actually kind of grown with us. It's been a kind of a good mutually beneficial experience as we've grown. That we get some benefit of having other brands in their portfolio. It's a good cost offset, but we still maintain, I would say, kind of top priority in their focus whenever they're making calls to retailers. And all I can say is that I talk to my sales team every day. So we're joined at the hip. You'd think they were internal, and that's what we want, because I think there is a real tendency that you can lose the attention of your team if you get lost in their portfolio.
Yeah. Sort of keep their feet to the fire, so to speak. Challenges, Rob. What sort of keeps you up at night right now?
Look, we've 2024 was a pivotal year, and we've accomplished a lot. I'd say we launched our whole portfolio in Ontario, and got that listed successfully and out in the market. We made a lot of headroom in cleaning up our balance sheet, right? Cashing up, reducing some debt. We still want to focus on that side there, and we do feel we've got some room to grow in terms of improving our debt situation there. But now that we've got a lot of those kind of milestones behind us, my focus is purely on driving revenue. And our focus always has been around building the fundamentals, because we think that's the best approach for, say, building the corporate brand or the stock over time and value for shareholders, is continue focusing on the fundamentals. And so I would say the big things that I was worried about are behind us now, right? We've got cash in the bank, we've got a sustainable operation that's delivering healthy margin, and so now the focus is just about grow fast. That's it. Deploy the money in a prudent, disciplined way, as we always have. And that's kind of the balance, is how do you be aggressive yet disciplined? That's the magic balance.
And do you think that the capital you've raised here, does that get you to break even, or do you foresee a reason to go back for more equity?
I think we've got enough to get to a major inflection point on profitability. With what I see right now, you can go in and see what the cash burn is on a monthly basis, and for the folks, there's also some things that you can't always see in the balance sheet, where when you're in a period, say in Q2, Q3, and Q4, where we're cleaning up a lot of stuff, you'll see we made a lot of progress in paying down some payables. And so, you're in the middle of financings and stuff like that. You got a lot of one-time costs. So we can see what the cash burn looks like. And with that in mind, and with the trajectory of growth, I think it's very reasonable that we cross those inflection points with the cash that we have. That's at least the intent, is we wanted to raise enough that we've got a good runway to just put our heads down and get to work.
Awesome.
Yeah.
So as investors, we're watching the business right now. What do you think is the most important, I call it, metrics or catalysts to watch out for? What should we pay the most attention to?
Look, mostly it's about our distribution growth. We focus on driving revenue. It's really the causal factor is driving distribution growth. All we have to do now is put more top line through the system. We've built a healthy machine that you put $1 in, we get 73 cents on the dollar as of right now from a margin perspective. So that is the focus for us as a growth story. We're still in the first inning from our perspective, right? We just got into our first major, this year, our first major province, got the portfolio listed midway through the year, right? A few SKUs at a time. And so now that we've really kind of penetrated the province, we can double down there. But it's about growth. I would also say our focus, what we focus on is sustainable margin, right? It's one thing to have great margin for one quarter, but we came out the gates with, I think it was like, high 60s, and we've maintained this, 68, 71, 73. Then I think our average over the 9 months is 71. So we've got sustainable margins that we continue to look for ways to improve that. So driving top line, maintaining good margin, and then everything else takes care of itself, right? Good cost control, and let the money drop to the bottom line and reinvest.
Yeah. Sales is almost everything. Absolutely. Yeah.
Yeah. Which is, look, it's an important part for us. We had to spend, it's a little bit of pain up front to set the machine up, and the machine being the business upright, right? But that allows us now to, we were asset light from day one. I can tell you, stories of 3 years ago when I was talking about wanting to be asset light, was getting laughed out of rooms because they're like, what? And that was in an era where people were buying as many greenhouses as possible. And so, fortunately, that's worked out for us. And now all we need to focus on is growth, where some of the market is focused on preserving cash, culling SKUs, closing facilities. We are just focused on growth.
Yeah. Now, one thing I was impressed that I had the opportunity to come and do a site visit, and you described how much revenue you can generate from a very, very small footprint, which was extremely impressive. What do you feel is your current capacity without having to, expand or add more machinery? What can you do with the current footprint in terms of revenue?
The current footprint, we're, I would say well over 10 million plus annually, easily, out of that facility alone. And so, not to mention how you might grow if you ran out of space there. But essentially, we're running a factory in a factory model, right? We have our licensed partner that we work with, hand in hand with. But really, that model is kind of the proof case of how you might think about expanding the business. And that was an important thought process, again, very intentional as you think about something like the United States, where in the US, you can't send cannabis across borders. So what you ultimately have is state by state by state operations. And so that was important for us to say, look, we've now basically proven you've got this small footprint that, if anyone is able to do a state by state play, we're set up well to do that should we decide to go that route. If it's not us, it's a licensed partner, right? So for relatively low CapEx, for relatively low footprint, we've already ironed out all the details and mechanics of having a, say, manufacturing factory within a factory. We've got that model ready and waiting for us.
Well, maybe talking some numbers. Like if you were to duplicate what you have right now, I know so much of the money's gone into R&D and IP.
Yeah.
But as far as CapEx, if you wanted to duplicate what you have there in Ontario, what do you estimate the cost would be?
Yeah, you're talking sub, obviously the actual facility is another conversation, but equipment wise, you might be talking, $500,000 to unlock a complete other facility. That could be another state, that could be another country in Europe, that could be a country in Asia or Australia. And so, in the world, in the context of cannabis, where folks have to build an entire 20,000 square foot facility for, say, growing, which that would be considered small. Relatively speaking, we have, low capital requirements for our business to stand up a new operation, which makes it very attractive to, say, even a licensed partner, right? Someone that wants a turnkey solution of technology, equipment, brands ready to go. We can turn that on pretty quickly.
Yeah, that's what I was blown away with. The scalability of what you guys have is immense. Like it's so different than anything else we've seen in the cannabis space and a lot of other businesses. So good on you for that. Last piece, like key message, or if we missed anything here, this is your opportunity to cover anything that you want to make sure everybody
Okay,
walks away
a
with
lot of
today.
great questions. I appreciate all those questions and good detailed questions that help get into the weeds, so to speak, no pun intended. And I would just say, look, the story is we're just getting started. We have a lot of we believe we have a lot of upside still to go, and we've got a clear path, right? A clear path to profitability. It's not we didn't build our strategy on hope and prayers. It's very clear strategy to get there. It's laid out in the MD&A. Go have a read, and we will keep everyone updated. But we're thankful for everyone that's kind of come along the journey and been patient with us as we kind of retooled this business and the last couple things to do at the balance of the year here. But 2025, I would say, is like where we will, turn the page on 2024, which was the transformation year. In 2025, we're full sprint.
Mm-hmm.
Yeah.
Well, listen, we don't usually invest in sort of pre-profit companies. You guys are the exception. We see a real clear path to profitability here. I'm really impressed with the scalability of the business. So, we're happy to be along for the ride, and obviously we'll cheer on from the sidelines as loud as we can. So I appreciate the chance to get this update. Certainly for a number of you, it'll be the first time you've heard from Rob. So thank you so much for this time today, Rob. We certainly look forward to catching up, and good luck with everything. We're, like I said, cheering you on from the sidelines here.
Thank you. And yes, I'm sure we'll be back. Totally open to that.
Excellent. Excellent. Thanks a lot. We've been speaking with CEO Rob Carducci, Glow LifeTech, symbol again, GLOW on the CSE or GLWLF on the OTC. Last time, thanks, Rob, and we'll catch up soon. Bye for now.
Thank you, everyone. Take care.